Welcome back to Crypto Labs News, your home for no-nonsense crypto insights. Today, we've got a lot to unpack, from XRP and Bitcoin price action to what the Federal Reserve just said in front of Congress that could flip the market upside. Down, we'll talk about why Ripple CEO is fired up if Donald Trump is about to shake up the Fed, what Fidelity, the $6 trillion asset manager, just revealed about crypto, and we'll dive into some powerful new updates. ETF inflows, CBDC, momentum, XRP ledger upgrades, and more. All I ask, that you send some good vibes with a beautiful smile and smash that like button, because likes are free, but the alpha you're about to get is priceless. Let's jump into it. Let's start with the numbers. XRP is holding steady around $2.19, up slightly on the week. It did spike to $2.22 before cooling off with the broader market. Bitcoin surged to $108,000 before pulling back, now hovering around $106,000. Still in bullish territory, but showing signs of indecision that we're not just seeing movement in crypto. The S&P 500 is up over 50% since the bearish calls from Michael Burry and other doomsayers earlier this year. Yet volatility remains high as the 90-day tariff pause comes to an end in early July. That could be a trigger moment, bullish or bearish, and we're watching closely. Today, the Fed chair spoke in front of Congress, and his words carried serious weight. He hinted that future trade deals could give the Fed room to cut interest rates, something Wall Street and crypto bulls have been dying to hear. Morgan Stanley now expects 7 rate cuts starting March 2026, which could drive risk assets, including crypto, to fresh highs. Why does this matter? Because liquidity is king, and when rates fall, money flows. Also, the Fed acknowledged that stablecoins and crypto have become more mature and mainstream. It's no longer a fringe asset. It's part of the system. Now, things are heating up on the political front. President Trump, yes, the comeback candidate, just said he's interviewing candidates to replace Fed Chair Jerome Powell. That's huge. Even if he can't legally fire Powell before his term ends in 2026, the political pressure alone could sway monetary policy at the same time. Trump is pushing tariffs again, threatening to double them against NATO members like Spain if they don't increase military spending. The ripple effect? Increased global uncertainty and potentially more volatility for crypto. Let's switch gears to Ripple. The XRPL just got a new upgrade, focused on improving throughput and network efficiency. Ripple CEO gave a big shout out to the dev team, calling it major progress. This comes at a time when institutions are eyeing faster, more scalable blockchains. Could XRP's infrastructure be what draws in the next wave of adoption? Ripple has also been hinting at new partnerships, especially in Asia and the Middle East, regions that are becoming increasingly pro-crypto and pro-tokenization. Fidelity, managing over $6 trillion in assets, said this week that crypto is no longer an experiment. It's here to stay. They've already invested in Bitcoin ETFs, are looking at crypto custody solutions, and now discussing adding new crypto products to their client portfolios. This is not just speculation. This is Wall Street stacking. Meanwhile, in the UK, we're seeing a ridiculous double standard. Barclays is blocking credit card purchases of crypto, but just bought over $130 million worth of BlackRock's Bitcoin ETF. Retail? Blocked. Institutions? Stacking. Sound familiar? That's what JP Morgan did too. They're launching crypto funds, but won't let average customers invest in Bitcoin directly. This do as we say, not as we do attitude is one of the clearest signs that institutional FOMO is real, and they don't want retail catching up too fast. Let me know in the comments, especially if you're in the UK. Have you had crypto blocked by your bank? ETF inflows are heating up again. Over the last 2 weeks, we've seen consistent inflows into Bitcoin and Ethereum ETFs. And now there's growing chatter about a potential XRP or Solana ETF being discussed behind the scenes. Plus, BlackRock and Citi have been working on tokenized assets, real estate, treasuries, even private equity, all coming on-chain. Ripple's working on the same in Europe. This trend could reshape finance as we know it, and XRP could be at the center of it. Another big development: central bank digital currencies, CBDCs, are gaining traction globally. China's digital yuan is now used in cross-border trade. The European Central Bank is running pilot tests, And Ripple continues to partner with central banks for CBDC infrastructure. This may explain why the XRP ledger is focusing on scalability and compliance-ready features, aligning itself for a global role that we're still in the expansion phase of this bull cycle. Bitcoin dominance is rising again, currently above 65%. Historically, when we hit 71% dominance, we tend to see a shift into altcoin season shortly after. Keep your eyes on XRP's next resistance at $2.26. A break above could send it surging. So here's the big question. Are we on the verge of a full-blown crypto breakout, or just another head fake before a deeper pullback? Let me know in the comments. Do you think XRP will break $2.26 soon, or are we going back below $2? And remember, Crypto Labs News will never message you asking for money, signups, or investment deals. Those are scams. Stay safe out there. Don't forget to smash that like button, subscribe if you haven't, and drop a comment with your thoughts. If you want to support the channel, check the affiliate links or leave a super thanks. It means a lot. Until next time, stay informed, stay bold, and like I always say, let's make a lot of money.